The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN headquarters, and I am fortunate today to be joined by our man Basil Chapman, filling in for Tom. Basil, good Monday morning.
Good morning to you.
So, congratulations to the Philadelphia Eagles. Sorry, Patriots Nation. I'm a Patriots fan. Basil, of course, in Boston. I don't know if you're a Patriots fan, Basil hardcore, but quite a game, quite a tremendous game. Congrats to the Eagles for sure. Philadelphia, first championship. Got to be happy for them. But, man, quite a game, quite a loss for the Patriots, and we'll see what happens next year. That's all you can do. So,
yeah, I think it was just I'm a fair weather friend. Let's put it that way. I like playing sport. I'm not that much of a fan to watch it, but at the same time, you've got to admire fantastic athletes, and I think that really was a test of skill, and I think it was a test of tenacity. But at the same time, what was really important about it is that it's taken me a long time, but I finally got into at least following the game, I think, with a little structure.
Okay.
And what's really fascinating to me is, even though I've lived here a long time, been a citizen a long time, I look at this as if this is such an American game, because I grew up with football as real football. This is handball. It's really not football.
Sure.
But most importantly, it's like a military maneuver. It is so American. Everything from the strategy. I'm sure that there's a rule book that's probably hundreds and hundreds of pages
for sure,
thick.
right. Yep.
And the fact that it's changed over the years that I've watched it, because television and commercials have become such a big part of it.
Yes.
So it's got everything American about it. It's a strategy. It's thinking. The game actually only lasts for a few seconds and then it stops.
Right.
Timeout, thinking, and change.
If you like offense, I was just going to say, man, and most people like offense. That was quite a game last night. Only one punt all game, which is just amazing in terms of both offensive, not much defense at all for either team, but quite a shootout, quite a fun game to watch no matter who you were cheering for. And congrats to those Eagles, and hopefully Philadelphia is in good shape this morning, because they had quite a party last night, to put it lightly, in those streets. But we got some action in the market. Let's jump into it. So Dow Jones right now off 193, S&P's negative by 12, NASDAQ negative by 13. That's, of course, coming off Friday's cascade to the downside, 600-plus points on the Dow. And jumping over to the VIX as we begin to talk about this, VIX up above 1891, reached 1927 pre-market, and finally getting some volatility priced into this market, as we're seeing quite a slide here when you factor in the entirety of last week along with the beginning of this week. And Dow futures were off the lows. We were off as much as 300 points pre-market. So we'll see. I mean, it's early in the day. We're only talking about 40 minutes into the trading day, trading week, and already kind of right where we left off on Friday.
So this is very interesting, because look at the difference a week can make.
Oh, right.
And that was certainly a week or a week.
And we haven't had a week like that in a long time, like a couple of years almost,
not
right?
For a long time.
Yes, yes.
So I think it's really interesting in terms of what we're looking at here is, I would not be surprised. I'm not sure how we're going to get those statistics, but if we do get the statistics, I would not be surprised at all if a majority of people who normally would be looking to short either weren't short or had been short, but because of that incredible choppy move that we saw going into the January 26th high in the Dow and the S&P, the fact that pullbacks intraday were met with huge, not just buying, but huge buying to all-time highs, might have taken out a number of shorts. I got a feeling that the move down, not only was it quick, not only was it a surprise, but the speed was so ferocious
yes.
that a lot of people and I'm talking about fund managers and I'm talking about hedge fund managers, really will be looking at the charts and saying, you know what, if I'm going to short, I'm going to have to wait for a bit of a rally.
Sure.
And I think that's going to put tremendous pressure on the upside. Every time there's a rally, we're going to see the inverse of what we've seen. This is what I'm thinking now, because the stochastic's way up at 25,917 in the daily chart, and we're at 25,375, so, 500-600 points lower. So this is going to be a really fascinating period. And we spoke about this when we were talking about, I think it was about a week ago.
Yes.
And I said, the thing that I'm watching very closely is going to be the yields. Just how at what point does the market be affected by the yields? I'm not sure this is all yield related at this particular time, but I think that once you start going down, then people can look for an excuse. And I always think you need a headline over the market, and perhaps rates could be one of the headlines. But certainly we deserve a break. It's been an incredible upside run.
Yeah. I mean, you look at, if rates really do start rising in this coming year, and it's going to be even more interesting, I think, having a new Fed chairman, it'll be interesting to see when the market maybe just finally comes to a realization that that's coming. And, of course, we had jobs number. We had some wage growth on Friday in that jobs number, and that was part of at least what was going on in the market for sure.
It's interesting. Part of what's happened in terms of looking at new Fed chairs, after almost every Fed chair, there's been a pretty major market decline.
Yes.
The crash of '87 happened after Greenspan. So it was Greenspan. So we've seen this before, but I'm showing you the chart of the 30-year T-bond yield. It's really very sharp. It hasn't broken the March 2017 high of 32.01. That's 3.201. We're at 31.8. So it's getting there. I think it will get there because there's only a leg C in the weekly chart. You've got a D in the 10-year. The 10-year has been moving up very sharply. But look at the 5-year, the FVX.
Yeah.
Look at that move. If I squash this chart, you can see that the others have all been in this area many times before. That's the 30-year and the 10-year yields, not the 5. 5 goes all the way back to 2009. So it's kind of important in that there's a disparity here and something that you can't ignore, especially when you're talking about rates. So that's something that I'm going to be watching, it has affected the home builders.
Yeah, I was just going to say, that is an interesting chart when you look at, the spread that usually exists, where they are, and then, man, that 5-year really just rising dramatically, especially compared to the 10 and the 30 on that visual basis.
And look how close they are.
Yeah.
Look how close they're getting. You see, that's so there are a number of factors here. They could put a lid on the upside, not to say we couldn't have bounces, but certainly, if I can pull this chart back, you can see right here was this cluster formation, and that was really a pretty important high back in 2007 in June, where they were all together, the 30, the 10-year, and the 5-year. So something I'm looking at, another thing that I'm looking at here, this is my weekly chart that I show my subscribers to my opening call every weekend, and iShares Global Timber Forestry ETF pulling back, and look at the housing, big pullback.
And of course, rates are going to factor into that, as we all know for sure. Okay, Stay tuned, folks. Come on back. Basil and I will be right back. We'll dive more into this market.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, everybody. I'm Tommy O'Brien, joined with our man Basil Chapman, and we are getting quite a little bounce in this market. Dow Jones only off 92 points now. S&P's only off 7, and NASDAQ positive by 8 points. Give it 15 minutes, Basil, and we'll see what happens. We could be negative again. Quite some volatility that we have not seen in some time. Go ahead, yes.
I was going to say, if you look at the volatility index, the VIX index,
yeah.
In my work, this is a leg E in the Chapman wave methodology. We hit 19.27. Let me just change this number right here.
Yes.
19.27. That is, if you look at the, we actually spent a little time, a little segment on this the last time we were looking at this, and we discussed that within the context of the weekly chart, we've barely closed up. Let me open this up. On the left here, if anyone's looking at the charts, this is my weekly chart of the volatility index, the VIX CBOE index. And right here is the monthly chart. And it went right to this downtrend line, and it just turned down. But Friday was the first time since the North Korea scare that was back in November, the week of the 11th of November of 2017. It has 17.28. And that was a weekly close above the 200-period exponential moving average. Hasn't been able to do that. We spoke about those long wicks that kept showing that the price kept fading, going back to the 9-period moving average, the black line. So the orange is 200-period exponential moving average. The black is the 9-period exponential moving average. We just went to a leg B. I put in rates because I think that's one of the factors here.
Sure.
But I always like to have a headline. We just made a higher high than we have all the way going back to, what was that, October? Yep, November of 2016, 23.01. That was the election period. So this is a very interesting time because the technicals actually are still very strong. The week is only open. We're not even not even an hour
into the trading week. Yes.
So we can't even talk about the weekly chart, but it does say that the history is that after a close above, you'll see each time we've closed above the 200-period moving every single time. Look at this, every single time. I can even go back to the week of the 9th of September of 2016. There was a close above. The next week it went higher. and then it fell to the 9-period moving average. And you got the election week, same thing. Red candle follows the French elections. It just keeps going. There's North Korea, red candle follows. So we'll see what happens here. I've got a feeling that because we haven't had a decent pullback in the market for some time, so far we're using a little bit of price that we can't even talk time because it's not even a full week yet. But I think that this is the first opportunity the market's had to have a breather. And as I said, I think a lot of people must have actually missed the short side or not been able to get out of their long positions that they were trying to take profits in. So I think that that puts a cap on the upside. Now we're going to see where does the base form to start looking at support levels.
Sure. And it's interesting getting, 200 points off the low in the Dow already. And I would agree that, every time we've seen the Dow down 200 points, we've seen the Dow down 300 points, but within a day or two each time there has been that rebound, right?
It was intraday, in fact, last week. Yeah.
Exactly. And so that's why Friday is almost so intriguing, because you had 250, you had 350, and that's nothing too startling because we've seen those days. And just like you said, if not by the close of the market, the following day, everything corrects itself. It's just a buying opportunity, and Friday was not the case. Friday, it just slid all the way from 350. I mean, the final few hours of Friday were quite an acceleration, where I would agree there wasn't that opportunity to maybe get short or see the opportunity to short, and before you know it, the Dow is almost down 700 points. And then it's kind of, well, geez, I missed the boat. Maybe I should wait for that little bounce that we always see. And then, again, we open up today, but we might be getting the bounce right now. That's for sure.
But there's another aspect, Tommy, and this is quite important, is that a lot of people must have thought over the weekend, I better take some profits. So what happened in the first hour? Now, the market has this way of saying, uh-oh,
sure,
mistake. So what will happen is that this is the opportunity now for the market to have a bounce.
Sure.
It could fill the gap. It could go to it's already filled a gap from previously. This is the gap that was established back on the 11th of January. High was 25,575. Next day, it gaps up. The low is 25,633, almost 100 points. So now what we've done is we've filled that gap. We've almost touched the gap that you had back on the 5th of January, where the low was 25,112. Today's low is 25,156. So we haven't quite finished that. So I think it's kind of a stair-step move towards filling those gaps on the downside. But now you've got to get that, what I call the H pattern like we had before. One of the reasons why we went short for my subscribers in my opening call is there was this H pattern that we had off the top. So now I think we can make a larger H pattern. I'll draw it in right now to show what I mean. It's a lowercase h, and it's just really an arch formation, and that says there should be a bounce, and at some point we'll start to test, I think, support levels again.
Yeah, because, I mean, like you said, I would agree, as in you might have woken up this morning and said I should maybe lock in some of those profits, right, or, some buying in there, because Friday was like something we haven't seen in a couple of years. So that's a different mentality as opposed to 200, 300 points is kind of something that I think nobody feared at all, just because we've seen 200, 300 points very often. And just like you said, within a few hours, if not a day or two at the most, the market was making new highs. I think we had something like 55, 60 highs made last year, which has proved, it was daily new highs no matter what. There were pullbacks, right? But 200 points, 300 points, and then the next day you were at highs. 600, 700 points. I think everybody kind of woke up and said, okay, we might not make a new high this week. This might be a little bit of a new territory. I saw some headline saying, I think it was the COO of BlackRock. Somebody, it was on the front page of CNBC, no matter who it was, saying you could see a 10 to 20% pullback. It only took one day to spark those types of headlines, which is pretty remarkable, right? One day, and you're only talking about a 2% decline in the markets, and then you're talking about 10 to 20% headlines. But that's kind of the fear that will be in people's minds, and that's what they will worry about, for sure.
So what I'm showing here is the 10-year Treasury note interest rate going all the way back to the 87 crash where it spiked, and then all of a sudden you've got this huge declining trend line, and it's a channel. And this is, now I'm going to expand this a little bit so you can see where we are. This is the first time that we've actually gone above this long-term, now I'm going back 30 years, right? Long-term trend line We've just snuck above it for the first time. I'd like to put it in perspective. We haven't yet broken the high in the cup formation that was made back in December of 2013 in the interest rate, 10-year interest rate of 30.36, 3.036. And the high so far today is 28.60, so 2.860. But it is the first time that trend line is broken in the monthly chart in a very long time. We're talking decades. So this is something to keep in mind. And the Fed would like, in fact, some kind of inflation here. So that's, that's a headwind to certain sectors, and we'll see how that plays out.
Yeah, like you talked about, one of them potentially housing, right? For sure. I mean, we've been dealing with mortgage rates so low for so long. If those start to rise, that's going to be an increase in payments, et cetera, and that'll have an impact on buyer demand for sure.
Correct.
Okay, come on back, folks. We're halfway through the hour. Basil and I will be back in 3 minutes. We'll dive into some of the equities moving today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, everybody. Tommy O'Brien. I'm joined with our man Basil Chapman. And man, it's just not stopping. Basil, Dow is only off 24 points. S&P is off less than half a point. And NASDAQ positive by 28 points or 0.4%. Quite a rebound in this market. We could be up 250 points by the end of the hour, Basil.
So that's the modus operandi, except for Friday's action. That's been the modus operandi of this market for a long time.
I would agree. If Friday didn't happen, this would be business as usual, and the VIX would probably still be at 11 or 12 or 13 at the most,
Correct.
right? Yes.
So what has changed now is that, for me at least, I'm looking at the daily charts of the Dow, the S&P, well, the major charts of the Dow, the S&P, the NDX 100 power shares, QQQ Trust Series. I'm looking at that as a daily sell mode that's been triggered because the MACD and the moving average convergence divergence in the daily chart and the stochastic have deteriorated very strongly. And now the 9-period moving average, in this case, the QQQ is at 165.29, up 69. At 165.30, you have to realize just an hour ago, it was at 162.53. I mean,
it really looked, yeah, no, there was a lot of fear this morning. I mean, when I saw Dow futures off 300, first thing that came to my mind was, wow, this would really be amazing if we were down 600 again or something, which, I mean, it had the potential. We've moved 300 points from there. We've just moved upside. So there was a lot that could have happened, and, man, it's all been to the upside.
So now look at the weekly chart of the QQQ series. There's this 9-period exponential moving average. Let me open this up. This is the weekly chart right here. This is the monthly chart. Monthly chart, it's like a little eye blink here. Nothing's happened, right? So
it was quite a January, right? So we have a long way to go, right, for sure.
Massive move. Now look at this black line. This is the 9-period exponential moving average.
Interesting.
Except for these couple of little days right here in July of last year, in the summer, where there was a sideways move. That 9-period exponential moving average has been like I always call it walking the 9 EMA. So it's been like a platform. It's like a staircase. So that's, to me, the most important out of all the charts. The weekly chart right now for all the indices is going to be very, very important. Why? Because in a couple of them, I haven't yet got a sell signal, let alone a sell mode. And one of the reasons is I need to see whatever chart it is trading below that 9-period moving average. And I would even have to say probably very deep, or at least 2 consecutive weeks below that 9-period moving average, which is at 162.92 right now. And today's low was 162.53. It went under it, but we're way above it. And that's going to be key for me. And what it's saying is, because of the monthly power, that this is going to be very important to monitor. That when both the semiconductors and the QQQs start to deteriorate technically in the weekly charts, I think that's where we start to get closer to some kind of climactic low potential. I don't see that yet. So I still think this is there are legs to go to the downside. We need it. The market needs it. But we need a headline that is pervasive. Interest rates is just one little factor. We need something that is really like shutting down the government.
That's what I was going to jump to that right next, because it's interesting. I mean, we have Thursday is the next deadline. It seems like you know, every week, but it's not every week. It's every 3 weeks that there's the short-term stopgap funding, and we're at the deadline again. So there's already talk.
This time it's different, because this time now you've got 2 real forces that are going to go against one another. Because for the Democrats, they're thinking of the elections later on. They're thinking of a whole bunch of things. For the Republicans, there's always dissension. So how do they how do they get things together?
Yes.
Is this the time suddenly we don't get the compromise? I think the market's saying we need to be a little more careful this time.
Yeah, no, and it's amazing how it just seems like we were there 3 weeks ago, right? And kind of the spin from both sides was that we'll extend it for 3 weeks, giving us more time to negotiate potentially, but it seems like the rhetoric already coming out is that
there's no spin, right?
It's going to be another kind of there's not going to be any type of DACA, there's not going to be any type of wall, and it seems like it's just going to get pushed for a short-term measure again. How long that will be pushed out will be interesting, but you make a good point that at some point we're going to be approaching the 2018 midterms. And I mean, we're already in 2018. It's already February. And it becomes a point where at some point they may not be as willing to just push it off and make a political stand on either side.
Politics.
Yes.
Right. Where you and I can think common sense and the politicians think re-election.
And unfortunately, as we get closer and closer to November, the politics are only going to get more intense and more fierce, and that makes deals much more difficult. And we already saw the government shut down for a day or two, and as we kind of creep closer to November, I would say the risk only rises. And we'll see how far they try and push this one out. But what is remarkable is it's Monday, and we're talking about Thursday. So we're here right now, and that'll be a headline for the next few days. And it's pretty remarkable that it's not as pervasive in the headlines because it's just something that's become business as usual, unfortunately. Normally in past years, this would be a big deal, whether it's even 5, 10 years ago, right? A big deal. Government's about to shut down on Thursday unless Congress does something. Meanwhile, we've become so accustomed to that it's kind of not even a headline on Monday morning that's factoring into the market. And at some point, it could factor into it more so, though. Yeah.
So I'm looking at this as if it's a little bit like the Brady block, or what, I don't know what they call it, but when there was a fumble.
Oh, there was a fumble.
You don't see that very often with Brady.
Unfortunately,
so this is what I'm looking at. This is what I'm looking at. There was a mantra. I mean, once he got the ball, invariably it went to where he wanted, and there was a person there, right? Suddenly there was a little change in the action, and that really, I think, was a mental deterioration of the thinking. So I'm looking at the market and I'm saying, okay, so we were down really sharply. We got almost, it was like the best I've seen was -8 just a short while ago in the Dow. Now we're -106. You see, and I've got, here's the 2-minute chart of the E-mini, went to a peak, D, Chapman wave methodology. D's where you lift your foot off the accelerator and you put your hover over the brake. Other things can happen. Look, we pulled back very sharply from the high that was made at 28 minutes past 10 at 27.63. We're now at 27.56. So that mental block that's what I'm talking about. The market is made up of rational and irrational decisions. If you're correct, you feel it's rational. If you're incorrect, it's irrational.
Sure.
But at the same time, the mantra, when it changes, it takes a while for it to sink into the market. And that's what I'm looking at here. To me, this has the look of a single leg A up in this 10-minute chart of the E-mini, going to a leg A. Now is where I watch it real closely. They've trapped the bears who got in first thing because it ran up really sharply. They've trapped the bulls potentially, because now if it goes down, we have the potential, if it takes out the low of the day, to have as ugly a day as Friday. It doesn't have to. I'm saying the thinking is, oh my God. So now we have to look at levels, and this is what I'm saying, that when the mantra changes, that's where you got to be the most careful in the market.
Okay, folks, come on back. We've got about 20 more minutes in the hour, and I want to jump into some of these cryptocurrencies, Basil, because they are having quite a tough day as well. Bitcoin, 74.35. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, everybody. I'm Tommy O'Brien, joined by Basil Chapman. We get the Dow currently off in 78 points, S&P's negative by about 4, and NASDAQ positive by 17. So jumping over to Bitcoin and some cryptocurrencies. Got some volatility in the crypto world for sure. Some of the headlines out there, just even on CNBC, over $60 billion wiped off the value of cryptocurrencies, and that's in some of the others, not just Bitcoin, because they all, just jumping over to some of this to get a quick glimpse, you got Bitcoin, 74.50, down about 11%. Ethereum, down 13%, 736. Litecoin, 133. Ripple, 72 cents. That was above $3 at one point when Ripple was making all of those headlines. Now, we've talked about it many times. Basil, I know you've heard Tom and I discussing it. One of the ways, if you want to trade Bitcoin, Nadex offers spreads. You can go long, you can go short. One of the better ways, I would say, to be able to short Bitcoin in a regulated environment for sure. But either way, and just to kind of give an example of what they have this week, so they have weekly spreads. We get the chart of Bitcoin up here, currently trading, call it 7,400. The spread goes from 3,600 to 11,600, so you're looking at an $8,000 spread. The middle of that spread being 7,600, which is approximately right where it opened the week at, 8 a.m. this morning. We're about $200 down from there. And looking at the market right now, it is basically just a spread of $15 to $20 on each side. We get the bid trading at 73.90, the offer trading at 74.30, and for these, you're trading every $10 in Bitcoin per contract is $1 in movement. So if you want to trade dollar for dollar, you could do 10 contracts. And, you know, you have limited risk and limited profit potential, but you have $4,000 on each side on a weekly basis, which is some nice movement, especially, you know, with the ability to short down to 3,600 and the ability to profit up to 11,600. We'll see where that week shakes out. But, man, this slide is pretty remarkable when you think that we're up at almost 20,000 at one point about 6 or 7 weeks ago when those CME futures initially launched. And from there, we've just kind of been sliding.
So I have a question for you, because you've followed this very closely, and you've been able to monitor the premiums. Are you now seeing that the downside premium is much bigger than the upside premium, or they've ameliorated? What's the situation?
Not really at all. So what's nice about the spreads right in the beginning of the week, depending on how you look at it. So right now with Bitcoin trading at 74.48, the indicative, which is Bitcoin, 74.50 we'll call it. If it's right in the middle of the spread, you're going to be able to buy it or sell it without much premium, because your risk and reward for either side is going to be somewhat similar, as in you're going to have equal risk to the upside or downside versus equal profit potential to the upside or downside. So right now, if you'd be buying it, you'd be buying it at 74.75. If you're doing 10 contracts, so you're going dollar for dollar, you'd be risking $38.75 for a potential $41.25. So pretty close dollar for dollar risk reward. Now on the flip side of that, if you were going to sell it, those would just reverse. So you'd be risking $41.45.
It's the same thing.
Yeah, and realistically, right? I mean, you're able to sell it at $74.60. It's trading right now at $74.68. The flip side of that is if you were going to buy it, you'd be buying it at $29 over the price.
Okay.
And that, you know, the reason why you're buying it just even slightly above is because your max loss is $3,900 versus your max profit of $4,100. So you have a slight risk reward in your favor. So the market is skewed by $10, maybe $15 just to represent that risk reward skew. Now, as this trades during the week, right, that's where the premiums do get interesting. As in, you know, if this starts to begin to trade up and maybe get a bounce up to the 9,000, 10,000 mark, that's where you could sell it. You'd have to pay some premium, but you'd only have loss potential up to maybe 11.6, and then you'd have the profit potential down to 36, or vice versa. You know, if this thing ever just really dives and starts approaching the 4,000, 5,000 mark, you'd be able to buy it, pay some premium, but you'd have your losses capped at 3,600, and you'd have profit potential all the way up to 11.6, and these expire Fridays at 3 o'clock. No matter what, it's a nice way to be able to trade in a regulated environment, because so often you're dealing with exchanges that are unregulated. We all have heard the stories, you know, that the exchanges get hacked or what it is, and you are at the mercy of some of those unless you really have a hard wallet where you're taking that, you know, Bitcoin off of the internet and putting it on a piece of paper. You are prone to some of those exchanges, and when you talk about shorting it, that's really an opportunity in a regulated, because that is a tough one to be able to achieve even in the unregulated exchanges.
So I just wanted to talk about this 15-minute chart that we've got right here.
Okay.
It's not the great. I'm sorry, it's not the greatest chart. It's the one I've got. I don't trade it. I just keep it as a reference point.
Yep.
And it's probably a little bit behind because it's at 7,500 right now. But what I want you to say, you see the way it's come down, and each one of these little bumps to the upside that failed. There's a technique in my CD called Introducing the Chapman Wave Methodology, and what we're looking at here is the pattern that I call the dreaded H. I call it the dreaded H because it looks like a lowercase h. If that left side low goes, it can go much deeper. And it keeps coming down, making a little arch formation, and at some point, the chart sometimes stops and makes a larger arch. I call that the lowercase h that goes to a lowercase m. It could even be a continuation pattern with a series of arches. Well, it just so happens to coincide. Look, you've got the H pattern, failure, H pattern, failure, and finally you get the M pattern. You see that M pattern? That's what I've been talking about for a little while now, that the pattern, when I did a Master Trader series, a whole day series on the Chapman Wave about 6 weeks or so ago, I discussed that the pattern we're looking for if the market is going to start down is this very H pattern, the failure pattern, that you can get the M. My theory also is that if the M is taken out decisively, you can get a one-to-one to the downside, and that's what you've got to be real careful of. So if you take it from there to there, and that's where you start the H going to the M, you've taken it out and you've gone to the downside. 72.15 I see here as a low. Now it's trying to bounce, but you can't get away from this H pattern until there's a very strong V-shaped pattern which decisively takes out the left side high. And in this case, if I'm reading it correctly, that would be the high of 78.08.
Okay.
If there's a decisive close above that level, all of a sudden you're looking at a potential change of trend. So I just wanted to bring it into context of it doesn't matter what it is, patterns are patterns, and they are basically fractals that are repeated all over in different time frames, and that's the kind of pattern that we're looking at here. So this better not fail and take out 72.15 if that was a low. Close under it because it starts that failure pattern of the H series.
It is remarkable just to think about it in terms of not even fundamentally, not even technically, just the mindset of cryptocurrencies. And, you know, Bitcoin, one of the cool factors is there's only going to be 21 or 22 million, I forget which one it is, ever produced, right? So you can't be diluted in the market. A lot of these ICOs, there's going to be 100 billion, like, for instance, Ripple. So if you believe in just the technology, you know, going far beyond the charts and the volatility,
Yes.
It's interesting to think about, where does that value start to come back in? Because we're approaching levels where you get back down to 2,000 or 1,000. It's not quite as an extreme level to say, okay, I think Bitcoin will be around in 10 or 20 years. Well, if that's the case, then there's only
That's
22. Right, for sure.
And you've got your one-to-one fundamentals and technicals combining, yeah.
Okay, folks, come on back. We got the S&Ps flat, Dow only down 10, NASDAQ positive by 17. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Tommy O'Brien, joined with Basil Chapman. So, Basil, I just wanted to kind of tell people how they can get your CD book. If you go over to the front page of TFNN.com that I'm looking at right now, you will see the Tiger Store link right on the front page. If you click on that Tiger Store link right at the top, from there, you will see you scroll down, softwares and DVDs introducing the Chapman Wave methodology. And I know you reference it many times, Basil. How many slides are in there? 400, 500 slides?
478, something like that.
478 slides.
Yeah, it's a chapter. It's in chapters, and it just goes sequentially, step by step, so that you really get a feel for it. And I always say to everyone, just read it like a book. Everything that sticks you'll say yes, and the other stuff will be fuzzy. You can always come back to the fuzzy.
Awesome.
Most important thing: identify the low bar, count each high at the peak. You get to D, the fourth highest peak. We're just in leg D in the TVIX right now with 850 high. We'll see what happens, because if it starts to pull back from the 737 level it's at right now, goes under 7. That's probably going to make a peak D. It'll give at least a short-term support to the market.
Pretty remarkable, and a pretty remarkable hour that we've had. I appreciate you joining me for the program.
Hour. Unbelievable.
Pretty remarkable. Yeah. We couldn't quite get positive on the Dow. We creeped up right to the level. We're now minus 40 on the Dow. Started the morning off about 200 negative. We're lower 300 negative. S&P's negative by 2. NASDAQ, though, doing well, up 15. And as we just finish off the hour, I just want to take a look at some of those NASDAQ high flowers. Where are we? So Amazon up 0.5%. We're as high as 14.98 after those earnings on Friday, pulling back a bit. And let's just jump around. Netflix as well, some of the high flyers.
Apple made a round number high. Amazon made a round number high on Friday, all-time high,
yes,
at 14.98.
Yep.
And it's trading now at 14.52.
And we were at 13.78 pre-market. Pretty remarkable.
Yeah.
Okay, folks, stay tuned. We got swim lessons coming up at 11. And then, of course, Basil will be back here with his Tiger Technicians Hour at 12. Great day of programming at TFNN. Thanks so much, Basil. Have a great day.
Thank you so much, Tommy.
Thank you. Take care, everybody. Thanks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.